So from the point of view what I'll speak about this morning, I'll cover off 3 key issues. The first up is a sharing culture, then an on-demand economy, and then I'll talk about why less is more is the next big thing. Okay, so to crack on. First of all, and what I've got here, by the way, are just purely 4 slides, so I'm not going to be sort of inundating you with information, so hopefully it's going to be fairly, there'll be a lot of clarity here. The key thing about a sharing culture that has been one of the sort of buzzwords of the last sort of couple of years has been from the point of view of what's mine is yours for a fee. So the idea that the internet has managed to leverage something that is an age-old sort of dawn of humanity trend, sharing, borrowing, but has basically enabled it to be used by startups around the world to massive success and sort of seemingly unending ability to make more and do better is quite extraordinary. So this idea I think we're seeing now is this. It's that access trumps ownership. And access trumping ownership is a fundamental shift in consumer behavior and consumer patterns. So in its most obvious format, what are we seeing? Naturally, you and I may use it from the point of view of the brand that one has to mention straight away, Airbnb. So you and I use it from the point of view of an asset. So we'll share, we'll borrow a stranger's accommodation to use when we're traveling, we're on holiday, potentially when we're on business. Others may use it, let's say, from the point of view of brands like Upwork to sell their services, to go away and perhaps work on our laptop or mow your lawn. We'll see other brands like Visit, for instance. When we're in a foreign capital, we might decide to go and have a genuine and authentic meal with a stranger, cooked by a stranger in their own home. So this idea of access trumping ownership is absolutely extraordinary. And what are we seeing? I think one statistic really, really amazes me. 2/3 of the world's population are interested in renting or sharing out their assets or their services for financial reward. A similar number are interested in using exactly that from strangers for the same reasons. So this idea that sharing is now becoming or is being leveraged by the internet on a global basis to take a completely standard social norm whereby we can all access it and use it is absolutely fundamental. I say it's fundamentally changing consumption from the point of view of desire and demand. Another area that I think is really interesting is this. So the idea that we've seen so far in sharing and the way that, let's say, a sharing economy has been reported on and used on, and all of those trend reports that no doubt come across your desks the entire time, is this. The idea of a perceived audience. And the perceived audience, let's say, so far for a sharing economy has been much like yourselves. So obviously incredibly young and stylish, the idea of being sort of, urban hipsters and whatever, and sort of, perhaps, millennials or Gen Xers, buying into a sharing model. But the idea that the model is urban and youthful and stylish is fundamentally out of date. Because again, what are we seeing? I think Nielsen recently famously reported, and I think it's an Economist very recently, and also reported in magazines like Wired, that basically about 60% of the global's population, again, are interested in borrowing and sharing, but not on the basis of 60% of that perceived existing audience, but an audience that is genuinely pan-demographic, completely crosses geographical boundaries and crosses age groups. So the idea that now basically everybody, or just about everybody, roughly say 60% of people in 60 countries are buying into a sharing economy is fundamentally altering how people are accessing brands and accessing products. Another key point that I think is absolutely fascinating is this issue of the consumer value equation. So consumer value equation so far has tended to look at a sharing culture from the point of view of dropping price. The idea that I'll buy into that sharing economy because prices are being driven down. That is absolutely changing. And so for a couple of examples, what are we seeing? For instance, let's say the transport world, the motor world. What we're now seeing is that potential, let us say, Lyft driver will now look at, rather than trading down, will actually trade up. So rather than, let's say, going for a basic model 5 Series BMW or an equal, let's say, sort of Nissan, is actually moving upscale. And why? Because they can see that the potential audience for that asset use, for that sharing asset use, will be more interested in sharing that asset if the quality is higher. So just as we're seeing, for instance, home ownership changing, if you're in the real estate market in Dubai or elsewhere, what are you seeing? A potential purchaser of that real estate, maybe looking at, let's say, a 3-bedroom bit of real estate, rather than a 2-bedroom, again, for its perceived return on investment. We're seeing the same thing in the fashion world. I mean, I do a lot of work there. I lecture back in London at London College of Fashion, and what are we seeing? That the potential fashion purchaser of a high-end fashion item may well, again, be either going upmarket, or on the other side, we're also seeing, let's say, the diametric opposite, the complete polarity here, whereby people may be foregoing ownership completely. Again, coming back to the consumer value equation. So from the point of view of purchase, should I go to the top end of the scale in any particular sector, or should I forego ownership completely? Why buy at all if I'm an urban-based worker? Why buy a new vehicle? Why not just constantly share? I think this week, The Economist have put out a fantastic report focused very much on Uber, because they have to, and talk about Uber World from an angle of a company that is absolutely altering individual ownership. And what are they looking at? And well, potentially, and there's an amazing statistic put out by the OECD last month that said that potentially, from the point of view of autonomous vehicle ownership or autonomous vehicle usage, if sharing vehicles on an autonomous basis really takes off, and Uber are absolutely wanting to own this market, then the potential impact on our roads can be an 80% plus reduction in the amount of cars on the road from the point of view of ownership. 80% plus. The impact on the motor industry could not be more significant. And in terms of autonomous vehicle ownership, we've all seen those reports about Google cars and all the rest. So that market, in terms of genuinely altering society, is fundamentally potentially going to have a huge impact. Another sort of area linked to it is, let's say, just the use of space, public space. A lot of American cities, again, as reported by The Economist and by the OECD, have up to 20% of the actual land usage taken by parked vehicles. So again, if this issue of autonomous vehicle usage takes off, the amount of land given back to the general public by not having cities choked with vehicles is absolutely extraordinary.